Good afternoon, traders, and welcome to this week's weekly market analysis class, Monday, the 30th of April. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's on our agenda this week. Let's have a bit of a recap of what's happened, highlight things that we should note. At any stage, if you have any questions, please type them in. And let's kick off with the US dollar. Well, first of all, the US dollar last week had a very, very good week, which ended on a little bit of a down on the Friday, and that was mainly as a result of people taking profit from the positions as the US dollar had made some good gains, so it basically turned it around a little bit. This week, it is a jam-packed week for the US dollar in terms of data itself. We first of all have non-farm payrolls. Okay, and it's very rare that non-farm payrolls will take a back seat to anything. But this week, it's exactly what's happening because we also have the FOMC statement and the rate decision. Now, nobody is really expecting a rate increase this week, specifically when they just had one last month. But what a lot of investors are expecting is the FOMC to basically come out with a statement which will indicate that they are preparing the market for an increase next month in June. What we may see in the couple of days leading into that Thursday announcement, by the way, for those who don't know, I'm actually directing your attention to this sector right there. So leading into this announcement, we may see the US dollar rise. Now, should they then deliver the news that everybody's expecting? Possibly not too much more movement from thereafter. However, if they do disappoint, we could get that rise and then we could get a sharp drop off as well. Now, typically non-farm payrolls, which is all the way down here, is usually dominates the headlines. And for those of you who know, non-farm payrolls is the first Friday of the month and normally dominates the headlines. But on this particular occasion, because the FOMC statement is happening before, it's not going to have the same impact. Normally, the non-farm payrolls will be an indicator as to what may be said in the FOMC statement. But this time it's the opposite way around, so we don't expect a massive impact from it. In there, amongst all of that, we also have PMI, manufacturing and non-manufacturing due out, and that pretty much wraps up everything US dollar for us this week. Okay, let's turn our attention to our own Aussie dollar. And for the Aussie dollar this week, we too have the RBA statement. The first Tuesday of the month is typically when we get a rate decision and a statement. There is no one's really expecting a movement locally from Australia. However, the things to look out for recently, our inflation reports have not been overly positive, and if anything, those reports gives the RBA a reason to remain dovish in their statement. So I guess what we're really looking for is, will they continue with that tone, or will something change that basically gives the Aussie dollar a little bit of an impetus? But at the moment, that's the way that it's looking, and it could be a little bit of a non-event. Possibly the trade balance numbers on Thursday over here could have a little bit more impact than the RBA itself, the announcement itself. So that's the Aussie dollar for this week. If we move along, the GBP last week had a horrible week. And ended on Friday with, I guess, nothing short of spectacular. We haven't seen big movements in the FX world recently, so it was, I guess, nice for a trader to see those movements, particularly against the Aussie dollar. The GBP AUD dropped around about 250 pips for the session, as the GBP was basically losing ground all around. Investors, the main reason I think came from the statement from the governor, Carney, which basically said investors were getting a little bit ahead of themselves in the assumption that an increase would be coming in June of rates, that is, whereas it could be basically that statement cooled everything off and pretty much the GBP lost ground. This week we have the PMI figures, manufacturing, construction and services all due. So should they come back a little bit stronger than what the forecasts are, we could get a little bit of a recovery on the sterling. Otherwise, if they continue to slump, well, then basically it opens up the pathway for the pound to continue to drop. Finally, of importance, data of importance, I guess, of significance for this week, New Zealand dollar. We have the confidence number, which was out today. Also, we have the employment change and unemployment rate, which is due out on Wednesday. New Zealand dollar took a hit, followed the Aussie dollar last week. So key will be the employment numbers. Let's see if it puts up a little bit of resistance, but in general, data from New Zealand has not been good, and it has reacted accordingly as well. In terms of data itself, that will a currency pair that will be affected by the data itself, it'll probably be the Aussie US dollar. That's the one that's going to be impacted the most by the most news releases and the significance of those releases. So look out for, if you're trading Aussie dollar, there's much on your horizon. The times that I'm showing you are in my local time, which is Australian Eastern Standard Time. So take note of that so that we don't get caught up in any trades that you do not want to be part of. Okay, that wraps up our summary for the week and the things to look out for. Let me bring forward my trading charts. We'll analyze the majors one by one. If you have any questions or any questions that you've gathered over the week that you'd like to ask, please post them up now. As I see them, I will try and incorporate them into what I'm talking about, and I'll try and get them answered for you. All right, let's kick off with the Aussie US dollar. Okay, let me just prepare my drawing tool. Okay, so I had the line here, and we can see that, let me extend it properly. It's broken through that line. But when the line is slanting downwards, such as this, generally we don't trade a breakout in this direction. Okay, we want to trade the breakout in the opposite direction of the gradient of the line. So this particular line is going downwards, so I wouldn't be looking at a breakout there. That's not the way that it works, or that's, at least that's not the highest probability way. So if the line, for example, was in the other direction, let me just draw another hypothetical line for you. So let's say if I had a line like this, okay, or a flat line. So this line is going on the upward side. So now if I break this one down, that's what I would call a breakout. So just in case, I did get one email from someone, and I just thought I'd clarify that. Because the line is like this, okay, I cannot trade the breakout downwards. However, if this line was there, okay, so it's going downwards, but the breakout on the upside, then that is a valid breakout. Okay, so just please note that. Okay, what about the down channel? Okay, so give me 1 second. So are you talking about a triggered down trade, Paul, or are you talking about, is there an opportunity right now where I'm drawing this line? I had a channel here somewhere. Let me just draw one in with parallel lines. Let me try and lock in my top line first, and then I'll move my other one around it. Okay, if I draw it like that, this is a tricky one. Okay, at the top I've got 1, 2, 3 touches. I have no problems with that. At the bottom, this particular one here, Okay, I'm almost touching down there, and I guess I could move it a little bit more. Let me just try and draw it a little bit better. Let me try and squeeze it in if I can. Okay, there, it's touching now. I would have really liked this candle to be touching not right, that's just right on the tip. Ideally, I would like it to be a better touch than that. This area here, I'm not considering a touch, okay? The way that I originally had this channel drawn was as such. I'll just show you. Where over here, it was a much better touch, okay? Where we had 1, 2, 3 there, and I had 1, 2, 3, even 4 there. Okay, so this was much better when I had it drawn this way. Unfortunately, well, no, not unfortunately. I think we had this. This was the trade. Who took it? Did we see this last Monday? Let me count back. 1, 2, 3, 4, 5. That would have been the week before. But that would have been the trade there. Last Monday we were about here, and we were looking for an opportunity here to go up in that direction. As you can see, price action didn't happen for us, and kind of lucky because it broke down, so that we had no trade. The question now remains, or the question that we've got to ask ourselves now, what about if we now jiggle the lines a little bit, and can we still, let me jiggle a little bit more. Give me a sec, I'm just trying to make it fit in. I think that's about as best as I can get it right there. And now I'm still happy with the top. The top is still okay. The top three touches I'm happy with. The bottom, I'm happy with that one. This is my question mark touch, that one there. This one I'm not counting as a touch, and then if I count this one as my second touch, well then that means that right now I would be looking for a trade. So what do we think? Are we going to count this second one as a touch, yes or no? So can everybody just type in if you think that this one here, are we counting that as a touch? Everybody, if you don't know, just type in question mark, otherwise give me a yes or a no. So a few people in the room. I'm still waiting on about half of you to respond. Okay, it appears that almost 90% of you are saying yes. Only one person is saying no. Okay, now I'm indecisive on this one. I'm not 100% on it, and mainly I think because I was already committed to the other, to the first channel, and removing it around, I feel that this one's a little bit on the far side, and over here I've got nothing. So in my books, I'm kind of counting 1 and 2. Now I have taken trades of a second touch. So what I'm going to say is this: if I look for a trade here right now, I'm going to consider it a second touch and an aggressive trade. Okay, does everybody understand what I'm saying? So this will be my first touch, and I'm going to consider this my second touch. And because it's a parallelogram or a channel, parallel lines, I can take a trade off the second touch, but it is considered on the aggressive side. Okay, so does everybody understand that? Can I just get confirmation to see who understands? If you're confused, just give me a little question mark, because then it gives me an idea of who you are, and if you need a little bit more assistance. When I get emails from you, then I understand a little bit better. Okay. All right, so we're all on the same page. Great. All right. Having said that, I have taken trades off the second touch. I do it all the time, and especially when it's a channel. I feel that because they're parallel lines, they do give me some protection. So having said that, let's zoom in and let's look for the trade. Okay, what I would like ideally Okay, ideally what I would like is I want these two candles, that's Friday's and the red one is today's, these two candles, I want them to remain similar to that. So in other words, I want the red one to remain as an inside candle, and that will make me very happy. And if I do get that situation, then I would be ready to take a trade based on that one. So in other words, if it remained exactly the same tomorrow morning, I would place my pending order at the break of the top of the inside back in this direction, and my stop would be placed below the green one as such. Okay, so I'm happy to do that. So flag that up, Aussie US dollar. I'm just writing it in my scrapbook over here. So Aussie US dollar. I'm looking for an inside candle tomorrow. Got it. Okay, let's move along. Euro USD. Okay. You can see from what I drew here, I think last week we were in here somewhere and I said I'm not really interested in trading this particular pair whilst we were in here. It was very, very messy until we leave. Okay, we have left. So we can see that we've broken down. So now what I would like to do is I'm looking for this market to pull back. If it gives me my price action candle set up somewhere in the area there, then I would be looking to hit that trade in that direction as such. This one's pretty straightforward, and ideally it would look like probably candle like that, a little inside candle as such, and then the third day on the break we would break it on the downside. Other than that, I don't really see any other option. Wouldn't really be interested in any other option actually. This is the best one. So let's flag that one as you're looking for basically continuation. Well, the start of a downtrend after following a breakout. All right, let's move along. US yen. Okay, so the US yen, we can see that has taken a good sharp rise, and basically on the back of pro US data. This is the one that the fundamentals may take us towards this region here, and should the FOMC disappoint, could quickly drop us back down. If it actually does do that, that will actually be exactly what we would be looking for to hit the trade in that direction. So this is a situation where the fundamentals basically would give us or assist us with the pattern that we would be looking for. It's really the only thing that I can see. I think we've crossed over here. We are making higher highs. So if we can get some kind of a pullback somewhere, look for the price action and then try and hit this one in a trend continuation in the forward direction. Okay. Let me see if there's anything else. Let me zoom out a little bit more. No, that's pretty much it. So that's what we're going to look for. We're going to look for the continuation of the uptrend with the US yen. So we just want a little bit of a pullback. When we get the pullback, look for the price action setup that we need, and then we continue with the trade. US yen. All right, let's move along. Let's have a look at the US CAD. Let me zoom out. Okay, US CAD, this channel looks pretty strong, very solid. I think in today's daily call, I also drew a version of this. Can someone confirm, was it the US CAD today, the daily call? If anybody saw it, can you please confirm? I'm not 100% sure if it was this. And no, it wasn't this. Give me a sec. I just got to go and check. Give me 1 second, guys. It was. Oh, okay. The lines are throwing me off. Okay, what I actually I like the rising channel better, but what I had in the daily call today was a rising wedge, which looks something like that in that direction there. So, which opens up the opportunity. This top line will still be what we're looking for, and then it could come down to this level to look for a trade, or I believe this level would be stronger. Okay, I like a channel much more than a rising wedge. So I guess nothing really changes. It appears that we are heading towards here. So let's wait. Let's see if we get what we need. And then from that point, we're going to look for a trade in the downward direction. Okay. It's very straightforward with this one. One of the beauties of a pattern like this, when it's been, if you think about it, it's basically taken since September of last year, is this point right here where I've got my crosshairs to get to what we have today. So it's given everybody a good amount of time and opportunity to spot the trade, which basically pattern trading is kind of like self-fulfilling. We need more people to see it, more of us to participate in it, because we give it the momentum that it needs to play out. So I really like this one. Let's see what happens when we get towards this top line. I believe that this is the highest probability is that it's going to come here first, which will give us the opportunity to take this trade. Whether it plays out or not remains to be seen, but that's what it looks like is the highest probability of what may happen next. All right, let's have a look at the cable, GBP USD. Okay, as you can see here clearly, basically the GBP has just lost a lot of territory in the last week and a half, 2 weeks, and now looking at this, if I just draw a line across here, I kind of like this. I'm happy to try and play an inside candle situation off these two candles and try and take a trade in that direction. So that means that I need to wait for today's candle to finish, and should it finish like it is right now as an example, then tomorrow morning you put in your pending order to break the high, which will be there in that direction, and you would put your stop in that direction there. So let me just write this one down as well. GBP USD long inside. So we'll look for that one tomorrow morning. Now, if I do get both set up, because I was looking also at an Aussie USD and a GBP USD, they are a little bit correlating. Okay, so you would have to make a decision whether, well, first of all, find out what the correlation level is between them, and second of all, did you want to take them individually or not? Questions just popped up saying this is only the second touch. That is correct. So, but you've got to see this pattern as, so what's this pattern that I'm looking at? If I move my top line a little bit like that, okay, it's not my favorite, but I'm catching two touches at the top. I'm catching two touches down the bottom, which basically means it's a channel. Okay, don't forget channels can be perfectly horizontal, guys. So in other words, my one touch confirmed at the top, two up there, one at the bottom. This would be the second one there, so this would be the aggressive trade. Okay, so if you don't fall, if you're not allowed to take the second touch on a channel, then that's okay. Just skip this one out. But for me, what I particularly like about it is that it came down so quickly. Okay, it's a really nice movement. this level has held before. I could even extend out to here. It's not quite, but we can see that the market did something in that area. We are there. I'm happy to take the risk on this one, or the probability on this particular trade. So if you're not allowed to take the second touch trade, well then just skip this one, guys, and then just focus on the other one. But for me, I'm okay with it. It's still not set today. Let's see what happens tomorrow, how it looks, and then if I like it, it'll probably be in the daily call. Okay, and when you look at it from there, it looks okay to me. Okay, so let's just see what happens. Does that answer the question, Rav? Great. All right, let's move it and have a look at the Kiwi USD. Okay, I've got to get rid of some of these lines. These don't mean anything now. Let me zoom out. Okay. The first thing that I notice is that whatever that region is, we've broken through it. All right. So typically when we break through, we could be on the way to the start of a downtrend. Okay, so therefore what I'm looking for is I would be looking for this one to pull up something, provide me the price action candle pattern that I like, and then basically I would be looking to hit that and continue the trade in this direction. Okay, that's what I'm interested in on this particular trade. Let's see if it plays out for us, and let's see if it continues along. There's nothing else on this one. Did anybody take the statistical trade on this one? I'm trying to see. I don't even remember where it would have started, about here somewhere. Okay, so Paul took it. So you're still in? Yeah, I'm just measuring. I haven't logged into that account, so I don't know. It definitely has not hit the target. It got close, and the stop is very, very close as well. Paul, can I just ask, what was your stop distance, if you don't mind sharing? So what I'm talking about, guys, for those of you who don't know, there's a method. Look, the reality is the method was originally formulated for the Euro USD, but it can work effectively for the majors. Okay, when you start to go out to a little bit of the exotics, it's a little bit hit and miss. Okay, the Kiwi dollar is still considered a major, so I don't mind using it for it. And the method is, if you get 7 consecutive days in one direction, we're looking for just a short-term reversal. Okay, and over here, if you count, we got 1, 2, 3, 4, 5, 6, 7. So if you go back and have a look at the daily call, probably Thursday morning's daily call, this was the trade that I spotted, and the way that you trade it is at the open, you take the trade in this direction, and normally I will go for about a 30 to 60 pip target, okay, and a stop around about the 30 mark. But I may vary these numbers based on whatever distance was traveled in those 7 days. Okay, so this part's important to me. I don't have a set formula where I say 10% of the distance or 15% of the distance or whatever it is. I just look at it. All right, so when I looked at this one, let me just measure it out again. That distance to here was about 300 pips. So if it was going to hit my 30 pip target, it had to get to that level. For it to hit my 60 pip target, it had to get to that level. And I felt that this was a little bit on the far side. It's a bit too much, because there's a lot of momentum in one direction. Remember, this type of trade is really designed. All you're really doing is you're looking for a green candle. And normally, if I'm still in the trade and this candle has already happened, then I will just close out. All right, so when I finish this class, I'm going to log into the other account. If I've still got it open, I will just close out that trade wherever I am, okay? Because the reason why I took the trade has already happened. Remember, we're just looking for a really short-term reversal, and there it is. That green candle came, and the trade is over. All right. Look, it may continue to go up to here, but that was not the reason that I took the trade. We're just basically taking it on. It's just gone 7 consecutive days in one direction. We believe that there's a good probability that there's going to be a little short burst in the other direction, and that's all we're looking for. Okay. Hopefully that explains that to you guys. Let me see. So for the Kiwi dollar still, okay, the plan remains the same. We're looking for a little reversal. If we can hit it, then we will continue with the trade in the downward direction. Okay, any questions on the Kiwi dollar? No? Okay, we shall carry on then. Let's move forward. Let's have a look at oil. Okay, so the triangle that we were tracking has broken through and it came back, it's tested and it's kicking on. So let me just get rid of those things now because they're no good to me anymore. Let me get rid of that line. I'm just going to keep that one down the bottom for the time being. Let me zoom out. Okay, I'm going to just redraw this as a rising wedge, but I am not allowed to trade off that touch, even if I had a setup right now, because it's not a touch until it pulls away. Okay, so I am not allowed to touch that, and this is different to a parallelogram because a parallelogram will dictate the angle of the line. Okay, so the channel dictates the angle of the line, but because it's a rising wedge, I can change the angle of the line wherever I like. So this is only the second maybe touch because it's only a touch after it comes down. So I cannot trade off that. However, I can trade if that level holds. If that level holds and the market comes down to here, I can trade there in this direction. Does everybody understand what I've just tried to explain? Can you just give me some confirmation? Or if you need it re-explained, just it's very, very important because sometimes I've seen people send me charts. Is this trade set up correct, Cristian? And they've taken a trade off here, and in their chart, then basically the market just continues to go upwards, and they go, well, why wasn't that a correct setup? And the reason again is until it pulls away, only then you can confirm it as a touch. All right. Now, when it's two lines that are parallel, and you've already had 2 touches on one of the lines, and then you're coming up to the second touch on the other line, that would be considered an aggressive trade, and that is okay, but it's still aggressive. In this case, this is not even aggressive. This is just nothing. At this stage, I've just drawn a line just to see if it holds or not. So our plan for WTI is let's draw it in. If it holds and starts to come back down, this is the trade that I'm looking for. Okay. Gold. All right, let me just extend this out a bit more. This is a really, it's a ranging zone, but it's not only just a ranging zone, it's also a, what is this, guys? This is a channel. It's a really good one as well. 1, 2, 3 touches, 1, 2, 3 touches. So if I come down to this level, then I'm interested in that trade, okay? And then when it goes back up to that level, I'm interested in this trade as well. So those are the two options that I have with gold. I'll leave the lines running. Let's see how it plays out. Let's see if it gives us the opportunity that I'm looking for. Pretty straightforward, that one. Last for the week, S&P 500. I thought I had a line across here somewhere last week. Oh, I didn't hit it. Can I make it touch? Oh, close. Okay, let's leave that one there and let's see what happens here. Okay, question. Based on what I said at the start of the class, if I have a candle breaking in this direction, is that an ad? Am I allowed to trade a breakout like that? Yes or no? Bear in mind, the slope of the line is downwards. Okay, Paul, Karen, correct. Am I allowed to trade that breakout? Yes or no? If you don't know, just give me a question mark. Paul, Rav, yes. Dennis, okay, I'll explain it in a minute. Okay, the answer to the question is yes. Okay, so when you trade a breakout, typically, let me just draw on this bottom part of this chart. So let's say the market's doing this and you have a level where it's resisting. If you're breaking through, okay, breaking through a resistance, or if it was breaking through a support level, all right, you are allowed to trade the breakthrough if the line is horizontals, or if the line is at an angle, you have to break through to the angle opposite of the angle of the line. Okay, so for example, if I want to trade upwards, an upward break, so an upward break is only allowed when the line is coming down. If there was a line here at an angle downwards, a downward break when the line is down is not allowed. Okay, you cannot do it. Does that make sense? So you have to do it in the opposite angle of the line. Just think opposite. So if you're buying, but the line is also going upwards, then it's not really a breakout. All right. So for the S&P 500, just let's wait and see what happens here. You could get the break like that, or you could get the price action in a downward direction, depending what you like. Okay. All right. Any final questions, please type them in. If you want me to have a look at something, let me know. I'll go back and recap very quickly. Aussie US dollar, we said that we are happy that this would be considered. For some of you, it may be the third touch. For me, I'm half and half, so I'm counting it as a second touch, and it would be an aggressive trade. If tomorrow we have an inside candle, I've got to trade upwards off the channel. Euro USD, we've broken through, so we're waiting for a pullback, and let's see if we can get to continuation to trade the downtrend. US yen, we're looking for a pullback down for continuation in an uptrend. US CAD, we're inside the channel and we're waiting to get to the top perimeter. GBP USD, we are at the bottom of a horizontal channel. Let's see if today's candle finishes as an inside candle, and then we've got the opportunity to trade back up. Kiwi USD, what did I say there? We are waiting for a pullback and then trying to hit the price action to continue in a downtrend. WTI, let's see if it comes down to meet us at the bottom line. Gold, nice horizontal channel. Let's see if it meets us on the bottom line as well. S&P 500, we will keen to see what happens on this top line over here. Okay. Question: do I have an opinion on cryptos, and can we or do I trade them? All right, let's have a look at. Let me bring some forward, and let me explain the reasons why I have not traded them thus far. But let's have a look at it. Where are my cryptos? Bitcoin. Let me put Bitcoin on my chart and let me zoom out. Okay, when all the euphoria came through and started to hit, this is basically crypto. All right, during this period, most of the markets were not available like a proper market. So in other words, people only wanted to buy, but no one was willing to sell to them. Okay, so the market was going crazy in an upward direction. I believe now the euphoria out of crypto has died, and we're starting to get a trend in market. I don't mean as in an uptrend or a downtrend. I mean as a smooth, proper candle sizes, no crazy things. And for technical analysis to work at its best, we need more regularity in terms of the candles and things of that nature. So I believe that if you wanted to now, this is starting to look more like a normal chart. However, there is that the cryptos are susceptible to instant bad news and press releases that can throw spikes throughout the market. So you have to be aware of that. And so for those reasons, for me, it's just much easier just to continue to trade the Forex. And on top of that, the leverage on the cryptos is significantly lower than the Forex. So you don't have the same leverage power that you do with the currencies. So that's my answer. But in terms from a technical point of view, they do seem to be smoothing out and making the technical methods you can start to apply it to them. Okay. Question. My T Chaser trade, is that still going or did I close it? Which pair was it, Dennis? I think it was Aussie New Zealand. I think I actually didn't take it. Somebody in the class, on the Monday class, pointed it out to me. And so what I was doing, I was tracking it via the daily call just to get the newer people some exposure to the development of it. So let me just bring it over. Give me 1 second. So there's my Aussie New Zealand. I can tell you now that it's closed, but let me just change the profile and I'll show you. I can already see that it should have closed off. And let me zoom in. Let me see when the trade started and I'll draw it out. I'll finalize it. Okay. Okay, I've grayed out this particular candle. This is the trigger, and this candle was the trigger. Over here, you can see that if I drop my vertical here, my CCI is below the 150. We got the 3 moving averages are in order, and that candle also closed below the 70. So that's the trigger. So if that was the trigger, the entry would have been right here. And remember, you're trading in this direction. Your original stop would have been there. Instantly the trade went backwards, starts to move down, and then gives you an opportunity to move your stop to this level. Then we move it to there, to there, to there. So the stop moves to there, moves to there, moves to here. And then at this point, basically, you see that over here is where you would have got stopped out on the trade. So this particular trade would have got you, let me just measure it, around about, in the end, not that much, around about 50 odd pips. Okay, it did get as high as 160, but it stopped you out there. Now that's the downside of the T-Chaser, that you rode the trade for that long, but from this point onwards it became a free trade pretty much from here, from this area here, because your stop was very close to your entry level. But sometimes I've seen T-Chasers just continue to do this, and just you can take the best one I've ever taken. Took a gain of around about 1200 odd pips on a single T-Chaser. Okay, there's been times in the past, and those of you who've been with me for a while, that we've had like 5 or 6 open positions with a total of over 2,000 pips on the table with T-Chasers going through their motion. Okay, so there you have it. So the answer to the question is this particular one, I never took this trade, but I was just monitoring it just so that everybody could see the development of it. And right here, it would have got stopped out, and you can see how I worked it out. All right. Any other questions, guys? Let me just put my channel lines back on because I'll forget. Okay. All right, guys. Well, look, if there's no other questions, let's wrap it up. Let's wrap it up for the week. And look, if anything pops up during the week, feel free to send me an email. Always send me your charts. Make it easy for me. Otherwise, it's too difficult to get through all the emails if I don't see what you're looking at. And that way I can just draw on your chart, send it back to you. Okay. Have a great trading week. Keep watching the daily call. And hopefully we get a few more triggers triggering for us. Last month we didn't get many triggers. Hopefully May we'll pick up a lot more. All right. Other than that, guys, hope you all have a great trading week, and I will speak to you next week for the weekly class. Bye for now.